Welcome to CMS Forex News. This is Alexander Shapiro, and today is May 5th, 2008. Australia's TDMI inflation gauge rose 0.5% in April and 4.3% in annual terms. The central bank's comfort level is within the 1-3% range. Inflation was led by higher health costs, rents, and petrol prices. As price increases accelerate, the Reserve Bank of Australia is compelled to at least hold rates, if not increase them. Housing prices in Australia rose 13.8% in annual terms during the first quarter, breaking the trend seen around the world. Compared to the fourth quarter, prices were up 1.1% higher than the flat reading expected. The gains came despite 12-year high borrowing costs. In a third release, the services sector in Australia saw a rather sharp decline for April, falling 7.6 points from March and dipping below the 50 boom-bust level. However, the market was more focused on inflation data. Today's report on inflation boosted the Aussie ahead of the RBA's interest rate announcement tomorrow. Against the US dollar, the Aussie rose about 100 pips. The market expects a hold, but also sees that the bank may become more hawkish in light of Sunday's inflation data. In Europe, the Centix Investor Confidence Index declined to 3.5 for the May period, undershooting expectations. In April, the indicator rose to 4.1 from 0.4 in March, a strong recovery. Investors are most likely concerned about rising inflation cutting into growth and the rising euro damaging demand from abroad. In the U.S., the ISM non-manufacturing index unexpectedly rose to 52 for April, moving back into expansion after 3 months of results below 50. The report helps to bolster the case that the U.S. economy is seeing some improvement after facing a sharp slowdown during the last 2 quarters. Fed policymakers have signaled that they will hold interest rates steady at 2%. If economic data continues to surprise on the upside, then they will be able to carry out that intention. The euro-dollar pair was trading higher today, though in a small range. The dollar gained in a knee-jerk reaction following the better-than-expected ISM data, but paired those gains rather quickly. The pair is up 80 pips from the week's open as of 1:25 p.m. Eastern Standard Time. It was a similar story in the dollar-yen pair. The dollar was down after strong gains at the end of last week. The services data from the U.S. gave the pair a boost, but those gains were quickly cut down. U.S. stocks were weaker today in the wake of Microsoft pulling its bid to acquire Yahoo. With the Bank of England still expected to cut interest rates in the upcoming months, and the Fed ready to pause its cutting campaign, the interest rate spread advantage favors the U.S. dollar. The pound continues to weaken against the greenback. A 100-pip decline occurred in the European session, even as UK market traded lightly in observance of May Day. The US dollar-Canadian dollar pair edged down 70 pips to start the week, reversing some of the greenback's gains from the end of last week. The Loonie benefited from a climb in oil prices, which rose about $3.40 per barrel as of 11 a.m. Eastern Standard Time. Canada is the world's 8th largest oil exporter, and its currency has a rather strong correlation with oil prices. Tonight, Australia releases trade balance data, and then the Reserve Bank will announce their interest rate decision. Overnight, Switzerland will post consumer prices, while the Eurozone will reveal producer inflation. Both the Eurozone and UK will reveal how activity in their services sectors fared in April. Tomorrow, we get 2 releases from Canada, building permits and IVPMI. Join us again for another edition of CMS Forex News right here at cmsfx.com.